seasonally adjusted Kagiso PMI, that's the Purchasing Managers Index, fell to 44.3 points. That's the index fell to that in May from 47.4 in April. I said earlier it's a quarterly. Of course it isn't. It's a monthly. Abdul Davids, who's head of research at Kagiso Asset Management, joins us from our Cape Town studios on a day, I suppose, Abdul, where we've just got to scratch our heads. If you took the platinum strike out of the picture, would we have had a similar result?
Oh, that's a very difficult one. Clearly, what we would have seen is some of the spin-off effects of the platinum strike on the manufacturing sector as a whole. But I think one probably should be guided by what's happening globally, and we've seen European and the Chinese PMI strengthening and obviously ticking up. So we could have potentially seen an uptick in our PMI in the absence of this significant platinum strike, yes. Sure,
well, we'll need to, because it's gone down so far. It was almost like a free fall in the past month when I'm looking at the graph of the index here in front of me. Abdul, is this is there a bounce that's likely to happen because of international factors, or if the strike continues? And I've been talking to business leaders who are saying they think that we're all underestimating the impact of that.
Well, I mean, we could see the impact on the GDP numbers, and that was quite material already. If one unpacks the GDP numbers further, we would have seen that manufacturing also contracted in terms of its contribution as well. So clearly, and anecdotally speaking to companies like AECI, for example, they are seeing a material impact in terms of them servicing the mining sector and the drop-off of activity and the impact that has had on their businesses as well.
So what are the chances of us going back to the kind of levels that we saw in 2009?
In terms of post the recession or during the recession?
Well, going back into recession. Theoretically, we're in recession, aren't we?
Well, I think one probably needs another negative contraction in terms of GDP for the second quarter to come through. But technically, I think it feels like a recession already. If one looks at the significant drop-off in activity levels, that is one of the big contributors to the decline in the PMI that we saw. And also, if one takes the employment index, for example, that's at a 5-year low of around 37. So it definitely feels like it's a recession in terms of manufacturing in South Africa.
And yet, our JSE powers on.
Yeah, I think over the years we've seen a diminishing contribution from manufacturing to the South African economy, and then moreover we've seen South African companies also globalizing as well. As we know, companies like Naspers, SAB, BTI to a large extent have the bulk of their operations outside of South Africa. So I think you can't necessarily draw that link between South African companies and the South African economy and the stock market at this stage.
What's the best index, or is there one on the JSE that we can follow that gives you a reflection of how South Africa Inc. is performing? Clearly, the way that you've put it, we've got Richmond, SAB Miller, BAT, Glencore, many of these global companies now that dominate the JSE All-Share Index. But is there one that we should be following?
Well, it's a difficult one. I'll have to rack my brain for that one. I think probably the retailers is probably the one sector that is almost 80 to 90% South African focus. So obviously we know Woolworths is now making an acquisition in Australia, so that will change the dynamics a bit. The industrial sector in terms of the transport sector is probably a good indicator as well, I would think.
So it's not really bad news for South African investors, what's happening in the economy, certainly not in the short term, because we're benefiting, or the retirement funds are benefiting from this globalization of South Africa Inc. But when you look longer term, we need to be a little bit concerned, surely.
Definitely, I think clearly from a not only an investment destination sentiment towards South Africa point of view, but also in terms of, and we've seen the new cabinet obviously, and the reshuffle that has taken place on that side, but really trying to, already we've diminished in terms of our standings relative to other African countries, but really re-establishing South Africa as the premier investment destination on a global basis, but also in an African context as well, I think is quite important.
So how is that going to happen?
Well, that's, I suppose, a question for government, and there's a whole host of stakeholders that obviously need to be part of that process. But just at a sort of current level, what we're seeing in the platinum sector, for example, with the labor disruptions, etc., Clearly, the legislation that allows this to happen needs to be relooked at. The fact that we can have a strike as long as this, being protected, obviously having the impact that it has on the economy without the necessary checks and balances in place to obviously prevent this from recurring in future.
What are those checks and balances?
It's very difficult for me to comment. Clearly, I mean, I'm not a labour expert, but I would think that once you've passed sort of a month in terms of a strike, there should be a meaningful effort, and government should really get involved in terms of resolving a strike, especially to a significant sector like the mining sector is in South Africa. We know it's a significant contributor and earner of foreign exchange. So clearly for significant sectors, and especially given this duration, there should have been intervention a long time ago, yes.
It is the biggest earner, isn't it, platinum, of foreign exchange into South Africa, and yet there's been a silence from the Labour Minister, Mildred Oliphant, apart from the fact that she got reappointed. I guess that's the last time we saw her in the headlines.
Yeah, I think, I mean, obviously the Labour Court tried to get involved, and given where the parties are, I mean, obviously it seems to be quite rigid positions in terms of, for example, the 12,500 rand. And I think you need serious intervention to obviously overcome that sort of rigidity in terms of their positions.
Our poor country. Abdul, is there any upside? When I look at the platinum strike, it seems to be at an impasse. You have a look at the PMI that you've released today. That's in free fall. I talk to business leaders. They tell me they feel very proud of themselves having invested outside of South Africa's borders, which of course doesn't help us a whole lot here within the country. Where's the upside in all of this?
At the moment, it's very difficult to see. Clearly, we have seen a slight weakness in the currency post the GDP numbers being released. And I suppose that's the only small silver lining that we're seeing, is that at the margin, with the weaker currency, hopefully it will improve our competitiveness on a global basis.
So that's about it. We're relying on the weak rand.
Unfortunately, at the moment, that's all we've got going for us. I think from a labour competitiveness, from the issues that we spoke about previously, the excess capacity that we've got in the labour market, it's very difficult to see a significant turnaround in the short term.
Abdul, just from a broader perspective, if we look at where this is all going to end up, because at some point in time the pain is intense enough for radical action to be taken. Now, we heard from government that the radical action that is proposed is greater state intervention in the economy, which is, I suppose, one path towards solving the issues. Is there any other option, and is there any other perhaps rock bottom that will finally get people sobering up here?
Again, I think if one looks at what will be the consequence of this very prolonged strike, is that we'll probably see significant job losses in the mining sector. If you look at Amplatz's Rustenburg operations, clearly it will never be viable again. It was already marginal in terms of the previous sort of labour negotiations. So I think with significant job losses, I think there will be a realization that actually we need to step in and we need to make an environment which is not only conducive for future employment levels, but also to allow companies to make a decent return, and in that way obviously have them employing more people into the future as well. And that realization will come only when we see the significant job losses that will come as a consequence of this strike.
Yeah, I guess there's the other side of the coin, is that as the industry finds itself more and more constrained by labour issues, it might just mechanise more, and then those that hope for increase in employment won't come through anyway.
That's right, and I think in the past these mining companies have always tried to link wage increases to productivity levels. Clearly, if you have a machine, that machine can work 24/7, and the productivity there would be significantly higher compared to a labourer, for example, or a rock drill operator. So from that point of view, I think at least linking wage increases to productivity gains and productivity levels, and at the very least, so get a benchmark in terms of what productivity levels are for labourers versus mechanisation. Already, if one looks at the stats that have come through in terms of mechanised mines in South Africa, they are significantly more productive compared to labour-intensive mines.